What is up, investors? Back again. Time to take a look at Intel Corporation, ticker symbol INTC. This is by request. Got a few requests a while back. Was waiting for them to report earnings, and I'm actually glad I did, because take a look at the action we had here today. We had a 1% move down, which is not a big deal, but take a look at the after hours. This stock is selling off pretty rapidly in the after hours, down 10%. If you're new to this channel, we take a look at stocks as they typically report earnings. We'll take a little bit of the news here. Today, I'm actually going to take a little bit more detailed look at the stock chart because this stock is selling off so much. I kind of want to pick a level here where maybe you can come in there and buy this. And now finally, what this channel is all about is we really take an in-depth look here at the numbers, because I believe if you want to be a great investor, you got to come in here and dig into the balance sheets, the revenue, the cash flows, and start understanding how to read these, because this is going to take your investing game to the next level. Now, if you want to trade, come here and be a chart expert. But if you're a buy and hold investor, or even like a swing trader, you probably want to come in here and understand some of this fundamental stuff. So like I said, this stock traded off very much in the after hours. In fact, it accelerated a little bit. Here we can see immediately it sold off 8.7%, and now we're down closer to 10. The company already had its conference call. Now, a lot of this sell-off is due because they had a product delay here. This 7 nanometer product is being delayed. And as you can see here, the rival AMD is actually gaining in the after hours. So there's belief that because Intel is not doing as well coming up with this product, that rivals are maybe going to get ahead of them. And now this was a 6-month delay. So it's actually a fairly significant delay that Intel is going to experience. And so that could definitely impact earnings. And I think that is why the stock is selling off, because this product is priced in. So if you're new to the markets, or maybe even somewhat new to stock trading, a lot of news is already priced in. Investors are already priced this product into the future financials, and because it's delayed by 6 months, well, that changes everything, and you see people sell this stock off because, look, it could be delayed 6 months. Well, who knows in another 6 months where competitors are going to be, and maybe they've got to delay it again. So as we can see, this stock is going to trade down into the $54 range. So we're up here at 60. That means this stock is going to come back down here into this $54 range. Honestly, the stock might get a little bit of support here, because as you can see, there's some tops here. Was a top here. There's a little bit of demand for shares here. There's much more demand for the shares down in this $50 range. Personally, for me, if I would be really excited, much more excited about getting shares down in this $50 range. Now, am I too greedy? I don't know. You can't get everything you want. I certainly would love Natalie Portman to come walking through the door right now and spend the night with me, but that's probably not going to happen. More than likely, this stock will chop around in this mid 50 range. And that's where I would, I wouldn't say I wouldn't want to accumulate shares here, but it seems to me this is going to be a little bit of a no man's land here. It'll be interesting to see if the stock can hold this $54 level, or to me, it looks like it might want to keep trading back down. I'm on a weekly chart here. You could stretch this out to a daily chart or something like that. But to me, there seems to be more demand for the shares down in this $50 range. That's what I would be looking. I would be very excited about acquiring shares down in that range. Let's take a look at the financials, because they were actually excellent. If you got a 3-month ended view here and you got a 6-month view here, we can see net revenue ticked up really nice. Again, we're in a tough economic position right now, and these are really excellent top line growth. We've got gross margins that are absolutely sensational and are holding up in today's environment. They spent $9.2 billion to make, call it $20 billion. That is absolutely sensational. We got research and development costs that are not much. I mean, they are, I don't know, in relation to where Intel is, $3.3 billion when you're doing $20 billion in a quarter. That is sensational. And then we got marketing, general, and administrative. This just shows the power and the market leadership that a company, and I mean, they have competitors, but it's not like a Walmart. There's there's industries with competition, and then there's industries like Intel that have a couple of competitors, but it's not a lot because the barrier to entry to get into this type of business is relatively high. And so you can see they don't have to spend a lot on marketing, and they don't have a lot of G&A costs. 1.5 billion in a quarter, that's not that much. So we get down to an operating income of 5.6 billion, call it 5.7. That compares to 4.6 on a 6-month view. We went from 8.8 up to 12.7. Man, this is really good. If they didn't delay that product, I mean, I don't know if the stock would go up 10%, but I think the stock would be reacting much differently if this product did not get delayed by them. So moving down to net income here. So we've got 5.1 billion on the 3. That's over a little less than $1 billion over the previous period. And we see here we're up over 2 billion, call it $2.6 billion over the previous period for 6 months. And again, we're in a relatively tough environment. We see shares, they are buying back shares, so that is kind of nice. Moving down here, we're going to take a look at the balance sheet. This is a company that's very healthy from a financial perspective. Total cash investments, we see ticked up a lot here. So you got to assume that this company might have issued some debt during the quarter, because this is a lot of pickup here. We went from actually the end of the year. This is a 6-month view here. They picked up $12 billion. I doubt, and in fact, I'm very confident that's not all from operations. So we'll take a look at that when we get down there. Everything looks fine to me here. This is a very solid company from a balance sheet perspective. Coming down here to the liabilities, we have the short-term debt. That ticked down just a little bit. Let's take a look at long-term debt. So here's what I mean. Whenever you see a company where their cash assets tick up this much, even a company like Intel, it's typically coming from debt, and we can see it here. It went from 25 up to 36. We'll call that $11 billion. And you can see you're almost at $11 billion when you add this here. Add a little bit of cash flow from operations, and that's where you get that increase in cash from. But look at the interest rates these kind of corporations are borrowing from, and the Federal Reserve, and people are just throwing these companies money. I would be borrowing money as well. So nothing really to be too concerned about. Everything looks good from a balance sheet perspective. Now, from a cash flow perspective, things look probably even better. We had $12 billion in cash flow in the previous period. Now we're up to $17 billion. That's really, really, really strong. So we can see they actually invested lots of money in their operating activities. They invested about $6 billion in the previous period. Now we ticked up to $14 billion. So they're doing a lot of investments, at least from an operating perspective. And then finally, we've got our next cash used in investing. We see the repurchase of common stock. So we talked about how they have a buyback. Here's in the previous period. Here's this. This should help shares if management is confident about the future and they have more ammunition left on that buyback. Well, look, shares are going to be trading down in this range, and they could potentially support that. So we've got a little bit of a dividend here as well. You can notice that ticked down because as they buy back these shares, they have to pay less out on a per share basis. So, there's different views on buybacks. I think when the company has a dividend, I actually like it because they're not only supporting it by buying back shares, but then less cash flows out of the business on a per share basis for the dividend. So everything looks pretty darn good to me here. So you see issuance of long-term debt. Here it was. They only did about $600 million in the previous period, and then boom, $10 billion in this period. So hefty debt raise by Intel. But again, I'm assuming the interest rate that they borrow at is probably as low or as is probably like a mortgage rate, basically. So companies like this, more than willing to do that. So we had some negative news here. I think Intel, for me, put this on your watch list. Now, let's say you're an investor and you bought this back up in here, or you're new, or you bought it in this $50 range and it's pulling back to you. I think you can start to think about doubling down on this. So it made we'll call it a virus low here of 45. I would say that provides that's really like the bottom support level I would see. I would definitely be actually really excited about buying shares shares right at this $45 level. Will it get down there? I don't know. Like I said, you can't have everything in life. I think you could look at it maybe even in the $50 range would maybe be where I would start nibbling at this. Now, if you don't want to be a pure play into Intel, there's lots of ETFs. I encourage you to go out there and find which ETF has large exposures to Intel, since this is a relatively small business in terms of a number of companies that produce chips and things like that. You're going to find one with AMD and NVIDIA and Intel, and maybe they throw Apple in there and a couple other, maybe even Amazon. I think they make their own chips, and maybe even possibly Microsoft as well. You're going to be able to find a ETF with exposure to this if you don't want to come in here and be a pure play into Intel. But, you know, look, this is you look at the PE ratio, 11. That's probably not accounting for this 10% decline here. Got a little bit of a dividend here. Again, this 2% is probably not accounting for this after-hour trade. So you're probably going to come up to, you know, almost 2.5% on the dividend yield. So this is not a bad one. We've seen a lot of stocks make this monster move. This one is pulling back. If you have expertise into their products and you don't think that this 6-month delay is going to be a big deal, I think, yeah, this one could be a good one to jump into. For me, definitely going to put this on the watch list. I'd like to see it pull all the way back to this $45 level. I think there's some signs that the stock market might roll over a little bit. We'll see what happens. I'm crossing my fingers. Again, for you guys out there, I'm not rooting for the market to go down. I'm certainly not short this market either, but if I can get things on sale, I certainly would like to do that. So we'll see what happens. There we go. That was Intel Corporation. Leave me a comment below. Tell me what you think. Maybe consider subscribing to the channel as well, and that like button would be appreciated. Thanks for tuning in. We'll be back again tomorrow. Good luck with your investments.